Shares of Tesla have gone off-road today following a disappointing earnings report, missing on both top and bottom lines. The company's cost-cutting efforts have been attributed to the downward pressure on margins. But our reporter, Allie Garfinkle, says the lack of growth in recent times may be down to an overlooked competitor putting the brakes on Tesla in biggest EV market globally. Allie, over to you.
Hi, Josh. So Tesla's meteoric rise has always been about the promise of growth. But one key linchpin to that growth might really be slipping away here, and that linchpin is China. Now, it's hard to overstate the importance of China in the global EV market. In 2022, China accounted for 60% of global EV sales. And instead of making progress there, Tesla is actually losing ground in China. Tesla's market share in China has been on the decline, falling from 15% to 10% from 2020 to 2022. And I've sort of identified two key reasons that Tesla's really been lagging in China. The first is competition, which is subsidized heavily by the Chinese government. We do know that on a geopolitical basis, China has been very interested in owning the EV market. And that means they have really helped bolster competitors like BYD, which has really specialized in affordable EVs that are made specifically for the China market. The other thing to consider is Tesla's really had some self-inflicted wounds. There's really no other way to say it. Remember, China is a key market, and it is also a market where people are making less than $10,000 a year for the average urban worker, which means Tesla price points might actually not be ideal. So affordability is going to be a key problem for Tesla moving forward in China. There's an incredible story in Walter Isaacson's book about Elon Musk really being interested in the robo-taxi and pushing aside the possibility of pursuing a Tesla that was maybe around $25,000, $30,000. And you have to wonder if that's a decision that, especially in light of yesterday's earnings, that Musk would make again today.
I wonder a lot about those decisions. But beyond China, talk to us about market share in the rest of the world for Tesla.
It's a good question, Julie, and it may be unexpected, but the best jumping off point for having that conversation is actually talking about the U.S. Now, Tesla has been known for its dominance in the U.S. EV market, but that dominance has been trending downward. In 2020, Tesla's grip on the U.S. EV market was 79%. Today, that number is 58%. Now, especially amid that sort of dwindling dominance in the U.S., comes from more competition, of course, but it also makes these emerging markets like China that much more important. India is another emerging market that we know Elon Musk is incredibly interested in. But that said, I've had a lot of experts tell me that, again, because of these affordability concerns, Tesla's not necessarily set up to succeed in India either. So for Tesla, what I would say is right now that race for global dominance is still far from won.
We will count on you to keep tracking it for us, Allie. Thank you.